Welcome, right. They're going to go here. Yeah. So I think about this, it's a bit like when you do exercise and you kind of wind down at the end and you just gentle sort of like way of just recovering. So we've had a lot of like deep technical talk. We're now going to get a bit of a reality check by talking to 3 insurers. So very briefly, let's start with you. Just who are you and what do you do for your job?
Sure, no problem. Hi, everyone. My name is Leah Emma. Hopefully, you all still have some energy left for this last session. But so I'm part of Solaria Labs at Liberty Mutual. Solaria is our enterprise incubator, and I'm part of the commercial lines arm of that team. And at Solaria, we're really there to kind of serve as a protected space within Liberty, where we can test into new areas with higher levels of uncertainty and develop new capabilities, generate insights and learnings, and deliver those back to the core without kind of distracting the core business from their day-to-day objectives.
It's great. When we actually, sometimes talk about the InsurTech survivors, you are the internal innovation team at Liberty survivors, so congratulations. Right, I'll come back to you in a minute. Caolan.
Yeah, my name's Caolan. Is this on?
Yeah.
Great. My name's Caolan Kovach-Orr. I work for Arch Capital. I'm the head of AI and automation for our shared services group, strategic analytics. So we help out insurance, North America, reinsurance in North America, and mortgage. Our goals for my team are really to stand up AI and put it into production over the next 18 to 36 months. We've got some short-term goals that we're already hitting, but our real focus is on making sure that this makes a big impact for the company.
Brilliant. And so insurer, specialty insurer, a bit of reinsurance, and then Swiss Re, one of the largest reinsurers, Rohit.
Yes, Swiss Re. So I do want to clarify that I represent Swiss Re Corporate Solutions. So we are the insurer within this big reinsurer. So we have 3 business units in Swiss Re. Corporate Solutions is the non-reinsurance part of Swiss Re. About an $8 billion portfolio globally. I am the head of underwriting strategy, so I work for our CUO and across the portfolio, and I work on all underwriting related topics, so actuarial, efficiency, people topics, distribution,
Okay.
and across different regions as well. I am based in the US. Yeah.
Finally, someone with an American accent or two. So I'm not going to ask you this question now. I just want the back of your minds to be working on it. I'm going to ask you in a minute, what have you seen today that's been particularly intriguing to you? But I want to come back, Rohit, just go back to you. So if there's one thing you're going to be judged upon for your success this year in your role at Swiss Re Corporate Solutions, what is the most important thing for you to achieve for your organization?
Well, I mean, quite simply, it is achieving our underwriting targets. That is from a numbers and financial perspective. So we have very explicit goals as it relates to combined ratio. And then for each of our individual portfolios, we have different growth goals as well as profitability metrics. So that's the headline. And of course, there's tons of initiatives and programs to achieve all of that. I think the good thing is that we are still in a hard market. Our book tends to skew more property. And so we certainly have the tailwinds to achieve some of those numbers. The bigger topic I think that's coming up in the horizon is how long does this market last? And that's up to anybody's guess. But I know that within our C-suite, and I'm sure within other C-suites as well, the big topic around underwriting is cycle management. And how do you actually plan for this cycle, particularly when you have a diversified portfolio like ours? Each of that is going through a different cycle. And that has both implications on the loss ratio side of it, so risk selection, pricing, keeping our actual versus expected loss ratios and the gap small, but then also on the expense side, because there's still a lot of premium in the insurance industry that gets allocated to cover the expense base. And so all of these topics like underwriting efficiency and how can we do more with less I think the timing and the cycle changing is almost a good moment for AI to be exploding on the scene, because I certainly see applications for it across the underwriting P&L.
Yeah, I mean, some really important points in there that are obvious when you say them, but people don't always remember them. In a hard market, a well-run insurer, reinsurer should make money. Innovation sometimes takes a back seat. Things get tougher when you get into a soft market. That's when innovation flourishes. And to your point, getting efficiency is actually often a very effective way of reducing costs. Caolan, similar question for you. At the end of the year, what are you going to be judged upon by your success in your role?
Yeah, that's a great question. I know this very concretely. It's automating submission intake from the underwriting perspective. That's number one goal.
Could you actually move your microphone up a bit? So your microphone up, yeah.
Oh, sorry.
Just run that past again. Make sure everyone heard that in the room, because it's also quite an important one.
Yeah, so automating automating underwriting submission intake.
So my understanding of that would be there's all these messy ways. You've heard a bit about how data comes into insurance organizations, a bit of a manual process. Underwriters don't always have time to get through it. You're basically wanting to make that, automated is the word, more efficient, using technology to go and do that.
Yeah, exactly. So automating the document classification, the clearance extraction, moving up the clearance clash algorithms, making all of that work. Targets for us. It's going to take a little bit longer than a year to do all of that, but at least getting the infrastructure in place and starting to show value on specific lines is our 2024 goal.
Excellent. Yeah, again, very good, clear metrics. Leah, you know where the question's going. What about for you?
Same question.
Same question.
I think for us, or at least for me, in our role in the commercial side of the lab, what we're really focused on this year is how we can, kind of be on the forefront of leveraging all these new technologies, obviously generative AI being kind of the big one, and developing use cases, putting them into practice, developing pilots and getting them into the hands and, of underwriters, for example, and other use cases.
Now, I don't know how much you're able to talk about what you're doing, but when we spoke, and you can say the answer to this question, Matthew, I'm not going to tell you, but you had some really interesting observations about where you were looking for data, external versus internal. Can you talk a bit about that? Because it's quite intriguing for me. A lot of companies talk about how they get data internally. You're actually going to some external data to bring that in to help your underwriters.
Yeah, I think in terms of, the first use cases we're exploring in terms of how we can really not only just like enhance underwriting. I think someone spoke to, obviously underwriters spend around almost half their time just collecting, reviewing, documenting information. So there's a huge enhancement play, but there's also, a performance play as well. How can we improve underwriting outcomes leveraging this technology? So instead of maybe honing in on use cases where we're leveraging internal data, we're looking at use cases where we can leverage externally publicly available data to create those efficiencies to improve those outcomes. So whether that's, public filings, aerial imagery, reviews online and so forth, those are kind of the areas where we're honing in on, because it's information that's readily available. And
readily available. So what's the balance between what you could find that's free, from our friends like Google, or that which you have to or choose to pay for?
It's a balance. I mean, I think that even take filings, for example, in a lot of cases, sure, they're available. They're technically, they're free, but to get them into a system or access an API, you still, are in a situation where you have to pay for them in some cases. But, there's different, I guess, concerns that you have to think about when you're dealing with publicly available information.
Yeah. And Ken, there's a version of that question for you, the sort of build versus buy decision. And I kind of wrap two questions into one. On that sort of theme, from what you've heard today, is there anything you've seen thematically, or you can actually name people, as you think about achieving your target for this year, that you've kind of spent the afternoon here, so hopefully you've got something out of it. Anything you've seen that you think that's actually particularly intriguing in terms of what you're doing and how that helps you, this build versus buy decision?
Oh, that's a good question. I'm going to answer your build versus buy question first.
So the easy one. And the answer is no, that's fine.
No, I mean, from a high-level perspective, Arch is, I think, very mature, where we go out and try to buy any solution that exists in the market before we try to build it. I fully agree with that approach. I mean, I've talked to so many data scientists, whether I'm interviewing them or doing some due diligence while purchasing software, where their companies spent years evaluating a technology, and then the data scientists came and said, we can do that. 3-4 years later, and they haven't delivered, right? It's not a good way to actually get into this market. Probably the most interesting thing that I've heard today was that last talk. I'd like to learn a lot more about the symbolic AI mixture, because Arch, as a company, is somewhat afraid of taking the decisions away from humans. So we're good at automating data entry. We're good at automating tasks, but no one is really talking about automating decisions. So it'd be, something that might unlock that door a little bit.
Well, thank you, because we're very grateful for Nigel for co-hosting this with us, and so it's good to know that actually his interview was the most useful thing you took away from today. Rohit, a couple of questions there for you. So anything that's struck you from today, and then there's a build versus buy question.
Yeah, I mean, build versus buy, I think there's probably somewhere in there is the partner option, right? So I guess when you mean, build versus buy, I don't think as a company we look at things, but you're not going to necessarily, from an M&A standpoint, certainly I would put that out. But I think partnering is certainly the way to go, because I think where I sit in the organization, I am a consumer, or at least the underwriting organization, we are consumer of what comes out of the tech organization. And oftentimes, for better or for worse, it's not fast enough, right? And there's all the reasons that folks have spoken about today, the legacy systems, the talent issues, et cetera, et cetera, et cetera. And so it's certainly to look outside, I think, and look at, explore solutions that folks are working on. I think the question then becomes, and I've been on the receiving end of a lot of vendor pitches, is passing through those, right? Because particularly when you speak about underwriting efficiency, I think in the last 5 or so years, I mean, the space has become so crowded. I think, Amy, you probably see some of that as well. And a lot of folks speak about the same themes: data extraction, submission, triage, bringing in other sources of information, serving up to the underwriter. I think what, similar to the last panel, what you said, I thought that was, that was interesting, because you spoke about appetite guides. I mean, when you put out an appetite guide, you usually have a list of industries, and then you have red, amber, green, and then you get submissions in. And then you look at the quote ratio on a submission on an industry that was green, and it's not as good, right? And so then you often wonder, well, what's going on? I thought we have appetite for this. But then when you actually sit down with the head of underwriting and you ask about restaurants and how they think about it, it goes into much more detail about, well, do they have a happy hour or not? Are they white tablecloth? Do they have corking? Do they have delivery? None of that is in the appetite. None of that is in the submission form. But I think based on what the last speaker was saying from Elemental, I think this is all where the subjectivity comes in, where I think some of this technology can be really helpful in improving that decision making. So beyond just the, let's automate the admin part of the work or the manual stuff, I think a lot of what, I mean, I think McKinsey had a stat a few years ago that 40% of underwriters' time is on admin. But there's probably another 40% that's just on research, right? And so if you can even help with some of that, and then really help to focus on the negotiation, the scenario analysis, the decisioning piece, then I think you're really making the job interesting.
Thank you. So that leads to a related question, Leah, for you, which is around the culture. So a lot of what you're, I guess, each doing in your own way is you're working with your colleagues in underwriting, but ultimately they're the ones that have to do what you're bringing them, I guess. So what are you seeing in terms of that engagement, willingness to learn, willingness to change from your underwriting colleagues?
So yeah, no, definitely. At a high level, we're seeing a lot of enthusiasm, a lot of engagement for getting their hands on tools that are powered by these new capabilities. I think underwriters and underwriting leadership, they really understand the or can see the power and the potential of these tools in letting them, again, our goal is, again, how do we create efficiencies for underwriters so they can spend more time doing those like high value activities and getting out and deepening relationships. And so, and then also, helping identify those kind of like the needle in the haystack among all of this data. And so what we really try to do is, I guess, two things kind of that will really make a difference in terms of adoption from underwriters, even though we're seeing a lot of interest. One is that we try to really engage underwriters throughout our entire kind of life cycle development process. So the more I think that they're engaged in and consulted on in the design and the build, and then have them involved in testing and getting that feedback, the more they're going to be eager to leverage those tools, and it also generates kind of having them involved in that journey. It's developing a lot of kind of like word of mouth within underwriting, within Liberty, to say, hey, I want this tool for my line of business, for my geography. And then second to that is just I think that the user experience is going to be critical to the adoption of AI and these AI tools. And so just the more we can just keep them incorporated in the process there, the bigger a difference it's going to make. But also I think it's similar to any other adoption technology curve, where we're going to see some really heavy power users out of the gate, people that are really eager to be early adopters, and then it'll take some time, but maybe some slow followers as well.
Yeah, that classic technology adoption curve. No, well done actually winning. I'm not going to call it a war on underwriters because it's your own team, but winning the hearts and minds. Is that your experience, Caolan? You're nodding away there. Is that yeah, good,
absolutely.
Too? Yeah. And Rohit, is it good culture? Swiss Re's always been quite technical, isn't it? Your underwriters tend to be quite
very technical. I think I remember in your last session in March, someone made the comment here that some underwriters maybe don't want to be augmented, and I think there's certainly a little bit of that. But overall, I would say our experience with rolling things out is if you do it well, and ultimately, if you're doing something that's making someone's job less painful, because the job is kind of, it's got a lot of pain points. There's a lot of handoffs, there's a lot of paperwork, tons of PDFs. No fax machines, thankfully, but a lot of PDFs and Excel. So yeah, people are open to it, but I guess the change management piece is really big, and making sure you make it successful with a small group first before you can scale it.
Someone's got a fax machine. Gary said, he didn't say they're not using a fax machine. I think it was Gary said that someone is using a fax machine. We want to find out who it is, not one of yours.
Yeah.
Not one of yours. Good. Now, just for conscious of time, if you had a magic wand and you had one wish to make yourself even more successful this year, your companies, Caolan, let's go to you. What's going to be your magic wish or your request from the audience or whatever? Take it where you want.
Yeah, if I could make one wish, it would be for more time. Everybody wants everything yesterday, and we've come a really long way. This technology that's driving so many efficiencies for us, it's light years ahead of where it was last year. But even in the last 6 or 8 months, new technology is coming online that makes these things better, right? So now everybody's talking about RAG as basically a way to mimic reinforcement learning, right? So you've seen this document before, you know what the answer is. That wasn't on anybody's radar a year ago. And so as the technology is maturing, it's going to take more effort to integrate, right? It's no longer just a microservice. It's a microservice paired with some vector store or knowledge graph. And then it's going to, there's something I don't even know about yet that's going to come online in 4 months, and it's going to be the complete solution. So time would be the
more
thing.
time. Now, I'm tempted to spell out RAG as the acronym, but I know I'm going to get one of the words wrong, so I'm afraid I'm going to have to ask you now to spell out.
Retrieval augmented generation.
Yeah, I thought so. I would have got the retrieval wrong, so thank you for that. It didn't embarrass me. And well done for spelling it out. Rohit, what's your magic wand or magic wish?
Well, my magic wish is that the job of an underwriter becomes really interesting, because, I mean,
It's boring. It's boring today.
Well, there are boring parts to it,
Right.
And I think the big challenge that the industry is going to face is this talent cliff that we all speak about, right? And there aren't a lot of people raising their hands to say, yes, I want to join this industry. Part of the reason is the notion that it's kind of, not a great and interesting place to spend your working hours. And there's a reason for that, and I think there's some truth to that. So I think the more we can change that and really take that 80 or 70% of the job and really over-index on the 20, 30%, I think that's my wish. I don't know how soon it can happen, but seems to be happening in pieces, dribs and drabs.
Come back next year and ask us. Leah, for you, what's your wish?
I think, and this is just kind of a recurring topic today, just the solutions we can deliver with this technology is only as good as the data we have available. And so, if I had my magic wand, I would just wish for, any API, any data feed that we need to deliver the solutions. There's so much we'd like to do, and oftentimes, getting our hands on the right data to deliver the right solution is the main roadblock. So.
Brilliant. Well, we're in the right place, I think. Any data, any solution, happy underwriters. Nigel, you've got your shopping list out there. Now, we do have one question, please, one question. I just want to see this Google microphone be used. Come on, someone's got to have a question. You have to be within throwing distance of Susie. Right, Nigel will get you to ask a question. With that, thank you very much. It was great having you on stage. Thanks for hanging around. And Leah, Rohit, and Caolan, thank you very much. Okay, Nigel, back over to you.